Okay, hello everyone. So this was relating to the fifth question. So the continuation of cash flow statement, 14 marks problem. So already in the previous session that we have covered almost 4 questions for 14 marks. Okay. So this is our first question, fifth question. So in the fifth question that has already been circulated, make only few changes. So make it as this as 2015, the first year as 2015 and the next year as 2016. Okay. So now the balance sheets of X Limited on 31st March 2015 and 31st March 2016 were as follows. So 15 and 16 information is given and the assets and the liabilities information given. The land and building is 80,000 and 1,20,000. The land and building is increased. So the land and as there is an increase in the land and building, so you need to prepare a fixed assets account. Obviously, whenever with the adjustment or without adjustment, separate account is required to be prepared to find out whether it is a purchase or whether it is a sale. Here also you need to prepare. Plant and machinery is also increased. Okay. Stock is reduced. So reduction or decrease in the stock is a inflow of cash. Sundry debtors is increased. Outflow of cash, which will be minus. Prepaid expenses will be is reduced. So prepaid expenses is a current assets. Okay. So cash at bank is going to be reflected at the end of the cash flow statement. So the liabilities and the capital, share capital is increased. So there is increase or issue of equity share capital. So any share capital is taken under the financing activity. Profit and loss account, the difference will be taken when you begin the cash flow statement. General reserve, there is a transfer to general reserve of rupees 20,000. So you can see there 50,000 and 70,000. 50,000 and 70,000. Okay. Now, sundry creditors is 1,63,000 and 2 lakhs. So sundry creditors is increased, so which is the inflow of cash. Bills payable 30 and 40. Outstanding expenses 7,000 and 5,000. There is a reduction of current liability. So reduction of current liability gives you outflow of cash, which will be minus. So for the certain additional information, very important, rupees 50,000 depreciation has been charged to plant and machinery during the year 2016. Depreciation is being charged for the year. Okay. So where do you take the depreciation? So depreciation will be taken in the separate plant and machinery account, and that depreciation will also reflect in the operating activity. So this will be taken under two heading. Okay. One, it will be taken under the operating and it is also taken under the respective account. Okay. And there is a piece of machinery was sold for rupees 8,000 during 2016. It had cost rupees 12,000. Depreciation of rupees 7,000 has been provided on it. Okay. So the depreciation is provided on it. You need to find out what is the actual written down value here or the book value here. Clear? So what is the cost of the machinery? So you can write it as note. So what is the cost? Cost is 12,000. Okay. The cost is 12,000 and what is the cost is 12,000 and what is the depreciation value? So depreciation value. Depreciation is, okay, what is the depreciation giving? So depreciation is 7,000. So what will be the value? So the written down value will be written down value or it is also called as the book value. So what will be the book value? 12,000 minus 7,000 is 5,000. So out of the 5,000, there is the sale transaction which is given. So what is the value which is being sold? It is 8,000. So now what will be the profit? So the book value is less than the sale value. So profit will be the profit on sale of plant. So this is how the calculation moves on with this adjustment. Okay. A piece of machinery was sold for rupees 8,000 during the year 2016. It had cost rupees 12,000. Depreciation was 7,000. So out of the cost, reduce the depreciation. So whatever the value which is left out, so that is called the book value, or it is also called as the written down value. So minus with the sales transaction, you will get 3,000 profit. So where do you take the profit? Profit is treated under the debit side of the respective account. So as you apply the real account rule. Okay. So now prepare the separate plant and machinery account. So particulars rupees. Okay. So what is the opening value? To balance brought down. So what is the value of brought down? It is 5 lakhs. Clear? 5 lakhs is the plant and machinery opening value. So also take the closing value by balance brought down. So what is the value of brought down? It is 8 lakhs. Clear? There is also profit which is earned on it. So make it as 2 adjusted profit on sale of plant, or it is taken as 2 adjusted P&L account. So which is indicating the profit. So what is the profit? 3,000 is the profit. Clear? There is also sale. So what is the value of sale which is given here by bank or cash? 8,000 is the sales value. There is also depreciation which is given in the adjustment. Make it as by adjusted P&L account. So what is the adjusted depreciation? So 50,000. Now take the total value of it. It is 8 lakh 58,000. 8 lakh 58,000. So minus with these, you will get 3 lakh 55,000. So as you got the difference in the debit side, so it is the purchases. Make it as, instead of writing it directly the purchases or a sale, take it as bank or cash account. So what is the value of this is? It is a purchases balancing figure. Clear? Clear with this plant and machinery account. And next there is also cash flow statement to be prepared. Particulars rupees. Okay. So first of all, you will take here the information. So now take the net profit information. So what is the net profit here? Minus it from the value. So it is 1,60,000 minus 1 lakh. So what will be the value? It is 60,000 is the net profit. Now take cash flow from operating activity. So which are the operating activity? You will take all the non-cash incomes and expenses into consideration. So add non-cash expenses. You will take non-cash expenses. Okay. So which are the non-cash expenses? There is a depreciation on machinery. So what is the value of depreciation on machinery you got? It is 50,000. Okay. And there is also transfer to general reserve information. So make it as transfer to general reserve. What is the value of transfer to general reserve? It is 20,000. So total it is 70,000. Okay, clear with this? So 70,000 if you put together becomes 1,30,000. So now in the one more column, reduce the transaction which are relating to non-cash incomes. So which are the non-cash incomes here? You got profit on sale of machinery. So what is the profit on sale of machinery? It is 3,000. As there is only one transaction, so directly write 3,000 at the outer column. So it should be reduced, reduction. Okay. So now reduce the value. So which gives you 1,27,000. So what is this called as? So this is the net profit before adjusting working capital. Okay. So now adjust the working capital information. So what is the working capital? You will be adding decrease of current assets and increase of current liability, which is indicating the inflow of cash. Okay. So here you will take add increase in current assets and decrease in current liability. So increase in current assets and decrease in current liability will be reduced. You can either way you can take. Either you can take the add information first or less information in the second. No issues. Okay. So no problem. Here you take the additional information only. Add the decrease of current assets and increase of current liability. Okay. Now, so what is the decrease value? The first one is decrease in stock. So what is the decrease in stock you got? It is 25,000. Okay. There is also the second transaction, which is decrease in prepaid expenses. Okay. So which is decrease in prepaid expenses. So what is the value of prepaid expenses decrease? It is 2000. So which has been reduced. Here there is one more transaction which is indicating increase in creditors. What is the value of increase in creditors you got? It is 37,000. So look at the questions along with the answers very carefully, then solve the problem. Then increase in bills payable. Okay, so what is the value of bills payable increase? It is 10,000. So totally what will the value? It is 74,000. 74,000. Yeah. So now 1,27,000 add 74,000 to it. You will get 2,01,000. Now less increase in current assets and decrease in current liability. So what is the transaction here you got? There is increase in debtors. So what is the value of increase in debtors? It is, as it is the reduction value, write it in a bracket. Okay, 10,000. So now you got the second one as decrease in outstanding expenses. So what is the value? It is 2,000. Totally it will be 12,000. So reduce out of it. So out of 2,01,000 minus 12,000, 1,89,000 will be the cash flow from operating activity. Here now record the second information, that is cash flow from investing activity. Here, so very important, cash flow from investing activity. So here you will record the purchase and the sales information. So you got the purchase of plant. So purchase of plant. So take the transactions of purchase of plant. So purchase of plant value is purchase of plant. You got it as 3,55,000. Okay, and take the sale of plant as well. Okay, sale of plant is given 8,000. Sale of plant is indicating the inflow of cash, and there is also one more asset which is given, purchase of land. So as we have not prepared, and you need to prepare, if at all you have not prepared, you have to indicate it show for investing activity. Purchase of land and building is 40,000. So as it is a purchase, it will be an outflow of cash. So what will the value of this? So this will be 3,55,000, 8,000, 40,000 is 3,87,000. Okay. So what is this called as? This is the cash. As you got the value in the negative, it is the cash outflow from investing activity. If at all you got it in a positive value, then it is a cash inflow from investing activity. Fine. So reduce from 1,89,000 to 3,87,000. So whatever will be the value, you got it as 1,98,000. So don't just write anything to it. So now take the information of cash flow from financing activity. Okay. So financing activity. So what is the cash flow from financing activity? So issue of equity share capital. So equity share capital is increased, right? So what is the value is been increased to from 5 lakh is increased to 7 lakh. So it is 2 lakhs increment. As there is no further adjustment, so make it as take this itself as a transaction. So 2 lakh will be the value of inflow of financing activity. Here, so now minus 1,98,000 plus 2 lakhs gives you 2,000. So what is this 2,000 is called? This is called as increase of cash or cash flow from financing activity. To this, you will be adding opening value of cash or cash at the beginning. Opening balance of cash. So what is the opening balance of cash? It is 16,000. It is added to it. You got 18,000. So this is called as the closing balance of cash, or it is also called as the cash balance at the end.